All right. Good morning, everybody. Enrique, how's it
How are
going?
you?
I
How are
love
you,
your
sir?
love your setup. You have such a nice
It,
camera. I need to get a more high def camera, you know.
yeah, I
You
spent
look
some
so good
time.
enhanced in front of all your stuff there. I love it.
I spent some time, and I've actually read all of these books too. So,
Really. Mine
yeah,
are mine are just like if I need to like hold a door open or
okay,
like balance something. I'll
yeah,
get around to them eventually though.
it's my library from like 20 for like 30 years of my career. So I figured instead of just having it sitting in the basement, I might as well do something with it. So,
Yeah, absolutely. Well, I mean, no shortage of topics to discuss today, I would say, especially after last week. Just to roll over some notes that I have, and of course, we can go basically anywhere on this call right here because I want to get your thoughts on as many things as possible in this hour. But we got 50 basis points, so I think the big question is what now? What does this mean? How did the market take it? Um, and then what's next for the big focus of the markets? Is it going to be probably, I guess, the September jobs report coming up next week? And then is everybody going to be hyper focused on the election? Is anybody going to be talking about a Q4 melt up, all that good seasonality stuff? And then we got some interesting stocks that are on the move right now. Tesla's looking interesting. I was looking at some of the junkier Chinese names. Speaking of electric cars, like NIO, because we have the China stimulus and the China rate cut too. Is this a big reflation trade? We have all of our favorite stuff moving. Uranium, big mover, so we can talk about that. Lithium is going up. Energy, what's the best place to be in energy right now? It feels like energy is about to get rocking and rolling here. Do we want to be in the refiners? Where do we want to be in this point in the cycle? Bitcoin's looking juicy again. Um, and I have some updates on some other charts we've been sharing, some of the growthier rate sensitive stocks that are still making these big bases that look like they're going to break out soon. We just kind of have to bide our time. So where should we start? 50 basis points? Let's go with that.
yeah, let's start with macro because I'm going to say something kind of crazy, and it will seem like a world like this can't exist, but it really does. I'm not sure the macro matters all that much at this point. After 2 or 3 years of watching every inflation report, every jobs report, it just seemed. And statistically, by the way, these last couple of years with the macro reports have been a more macro oriented market. I'm not sure it will really matter from now until year end. I mean, obviously, the election is going to be at least a volatile event. I don't know that unless we really got like a sweep of all the houses one way or the other, that would make that big of a difference. But, we've got a couple inflation reports. We've got a couple jobs reports. The Fed's been pretty clear. They're going to cut some more by year end. But I just feel like a lot of the unknowns are taken out. I mean, all the data is pretty stable, and that kind of lets seasonality come into play. And I'll add one last thing is that, to all of this, and this is really what I'm focused on, seasonality is contextual. If you go into year end, I posted something earlier today from Charlie Bolello that he I'm going to get the numbers wrong, but he said this is the 186th day of the year, or this was Friday, and the market's up 19.2% on the S&P 500. It's the 17th best performance at this point. If you look at all other 20 times the market's been up around this amount, it was up 80% of the time the rest of the year. There were two big exceptions, 1987 and 1929. And I'm not going to bet we're in a 1987 or 1929. Those are
Right.
things that
That's
happen
fair. That's
twice
fair.
every 100 years. So I'm pretty good with not taking that bet. The other two times where it was down 1 or 2%. So, I feel like the macro stuff can be dialed down, and let's just trade some stocks, man. And like, find some patterns, and keep it simpler than it's been for the last, I don't know, 2 years or so.
Well, yeah, and speaking of the last 2 years, I mean, September's been an absolute dog for the past several years, and we're on track to have an amazingly strong September. So, like you said, contextualizing the seasonality, a strong September when we've been just getting hammered every September for the past 5 years. That's not necessarily bearish right there. I mean, I'm not saying we can go straight up from here, but it does feel kind of inevitable that we're setting up for this pretty big Q4 rally. There's so many good looking charts that are just right there at these points where it looks like they just need a couple more weeks and then pow, here we go. So I mean, I'm on the same page. We're going to be spoiled for choice, I think. And you mentioned
Well,
something really interesting last week about that, about how you really have to hone in and find those outperformers when you are spoiled for choice, so that you're getting that alpha when you're trading.
Well, yeah, you need to be selective, but let's go back to what you were just saying too. Let's just keep it simple. There was so much noise about this interest rate cut. And, and I pound this over and over in a lot of my writing. The media is not here to be your friend. The media is here to get you freaked out, and the media is here to get you to click, to watch, etc. But sometimes the world's a little bit simpler. The 50 basis points, that's 50 basis points that's cheaper for business. That's 50 basis points that's cheaper for mortgage. That's 50 basis points that's, when you look at not only interest rates, but you look at commodities. I understand that commodities have been trading down because there's concerns about the economy, but both, commodities and interest rates are both going the right direction for profits. And so to me, and now we add in China, which I don't know. I mean, China's a mess. I heard today that they think the real estate problem in China is $17 trillion. I don't think that gets solved quickly. But now we're in a global easing cycle. China's easing, we're easing. Commodities are low, inflation is tame. We'll get this damn election out of the way and some of the noise out of the way. And yeah, I think you focus on the great setups, and look for big upside if where you can find it.
I mean, you mentioned China. It feels like China has been teasing, and like Alan Nuckman's been all over this year, but they've been teasing this like bigger, terrible to less terrible breakout over the past 8-9 months now, when we're finally getting this big move in the FXI, and I'll pull this up right here and share this with everybody. But yeah, I mean, it feels like we're starting to see some very constructive action here. I know this is a big move here, and these names can be kind of wild, but at the same time, I mean, they've been knocking on the door and failing, and now we're getting back up to this 29 level right here. It feels like to me that this is the type of setup where you can get some serious rocket fuel, and these can blast higher. And with all the news being bad, I think that just sort of adds to it. That adds fuel to this move right here.
Yeah, and the one I would highlight here is Pinduoduo, PDD. Just so you all know what PDD is this is the company that owns Temu. It's actually a funny story. They started as an agricultural combination of Amazon and eBay, but then they figured out that they had all these relationships with all these vendors, and they created Temu, which is not in China. I think it's called Pinduoduo. But this is a perfect example. This thing got hit. They blew away numbers when they reported, but they came in and just were somewhat cautious. They just said, okay, look, it's getting more competitive. The lower end consumer stock got destroyed, 140 to 85, okay, in a straight line, And so, but I'm bringing this up for a point. When we talk about selectivity, when you go into China, if you were going to do that as a trade, there's a dozen things that we could look at and say, oh, I think it's a really good setup. And they're all really good setups. Pinduoduo stands out to me that this stock is gapped up, 7% today or 6% today. Yeah. This thing could be at 130 and not even fill in the gap, So this is when you're in an environment that's stable, that's target rich. This is what I'm saying about being selective about your targets. There's a half a dozen other Chinese names we could go through, but for instance, PDD stands out as the kind of name that if you're going to allocate capital, because you're not going to allocate to 50 names, you're going to, you might allocate to 5 or 6. This should be the kind of name that you want in there.
Yeah, I mean, the ones that can really, really move, that can get you those double-digit moves in a day. I mean, they're such great traders. And like you said, people got so soured on this stock so quickly, and now things have changed like that. It can really move fast and try to fill that gap. And even a move to 120 from here, I mean, that's a big move. That's nothing for this stock to get it back and moving in the right direction. So what else are you looking at in this market right now? I know I mentioned lithium and uranium in our little intro. Is there anything you want to talk about those? I know there is a particular uranium nuclear type name that you like.
Well, I mean, we've obviously talked a lot about Talon and the whatchamacallit, yeah, exactly. The nuclear operators. And I think most people saw last week the news that came out that Constellation Energy, which is the largest nuclear operator in the country, they own about 20% of the nuclear fleet in the United States. They were taking one of the reactors at 3 Mile Island. We're going to come back to that in a second. And they're restarting it for Microsoft. Now, before everyone freaks out, that reactor only went out of commission in 2019. So when 3 Mile Island melted down literally in 1979, there were actually multiple reactors, and one of the other reactors was online for 30 years or 40 years, whatever that is, and the reactor was only shut down because power prices were too low. They couldn't justify it. Microsoft literally came in and said, "Oh, we'll take the whole thing." And that deal, so that obviously has triggered a huge rally in this group, which are called the IPPs, the independent power producers. What I'd say is this, is that, and this is a little bit of an insight into trading stocks that are winning. I love this group. I think these stocks go 20, 30, 50, 100% higher potentially across the next 2 years. I don't know that I'd buy them right here. Constellation's a perfect example. You have this massive gap up. You're over, the previous highs. I don't exactly adhere to you're going to fill the gap, but you're probably going to fill the gap a little bit here. I think that old high, which we had at 235, this thing could be at 235 and the charts still look great. So I love this group, but I think it's, this is another example. Can it go higher? Yeah, these probably go higher. Talon probably goes higher. Would I rather buy PDD versus Talon today for the next 6 weeks? Maybe, at least until the price changes. For the next 6 months, probably not. But this is where in trading, it can pay off to be really selective.
Yeah. I mean, just going back to the Constellation play and everything that's happening right now, it feels like we're in kind of a watershed moment where there was a story that that I guess maybe people more in the know and in our industry have been talking about the power demands for these data centers and AI, and that's been a big thing. But it feels like over the past week, this has really flipped to the front page and it's become a much more mainstream idea, which I think is super bullish. You're finally getting to this tipping point where folks are starting to realize, hey, we're going to need a lot more electricity to power this thing. And if you're going to want carbon neutral electricity, there's only one viable choice out there that can really do it, and it's nuclear.
And I know we don't dive that much into the hardcore fundamentals here, but sometimes I think it's really useful. I'm just going to give you one data point. What sent these stocks flying, a couple months ago, was they did an auction in this area called PJM, which basically is the Pennsylvania, Maryland area. It's kind of that mid-Atlantic. And the previous auction, this is for like a little bit of reserve power that happens in 25, 26. The previous auction went off at $40 or $45. This auction went off at $260. Okay. So what I think that what's really powerful about these names is I followed power for 30 years. The thing about power is if you have just too much demand, it's not like all the people using power say, "Oh, I'm going to stop using power. I'm not, in agriculture, I can substitute corn for soy." I can't substitute power if I'm running a factory or a home or whatever it is. So where prices can go, they kind of can go up infinity. I mean, if you look at the spikes in natural gas, which I posted, I sent you a note about earlier, when you're dealing with these commodities, the term is actually asymptotic, which is like they don't go up like this, they go up like this. And so, look, I wouldn't be diving into these in big size here, but I think that this story and it's not. I guess in this case, we actually did build a new nuke overnight. There's 2 more of these available in the United States to be restarted. But after that, it's going to take 10, 15, 20 years. So, I'm going to be interested to see if they ever try to revive Indian Point, which is the one that happened here in New York, which was an absolute friggin' disaster closing that thing. But these things have legs.
Is that the one all the celebrities rallied against?
It was the dumbest thing ever. They're like, well, after September 11th, they said, oh, it's a danger to New York. Mind you, we've not had any accidents or anywhere in the world other than a tsunami hitting. And I'll tell you, a tsunami was not going to hit the Hudson Valley. And then, they basically went in and said, oh, we can replace it with gas. And then they stopped the building of the gas pipelines. So all that power, New York City power prices are up 60%. And do you know where the majority of the New York City power comes from now? What source? Guess.
Coal.
Coal. That's exactly right. They replaced the nuke with coal. So it's just like, oh man, but I don't know. We can turn their unforced errors into our, trading and investing profits. So
yeah, fascinating. So we like energy. We have crude bouncing off support here. We're tracking like heating oil and gasoline for these potential failed breakdowns here. Well, what are some of the best areas? Some good names. I was talking with Ian earlier. Maybe we're looking at the E&P side, something like MRO. Do you have any opinions on any of these names?
Well, I think you've got to be careful with, I would be careful when you're going into the refiners. I think that I know MRR is not a refiner, but I think that area is still pretty dangerous. We talked about one last week, which I still love. I love Oil U, which is this leveraged E&P ETN. Take a look at that chart. And again, this is, it's funny. We're kind of hitting on the same thing, right?
Yeah.
Chinese stocks are very interesting. But if you're going to buy Chinese stocks, I'd buy PDD because that's the one that's got the real upside. E&P stocks are very interesting. I'm just going to look at, I'll look at real quick before we go back to Oil U. I'll look at Diamondback. Okay, this is the best E&P stock. Yeah, FANG. It's got the coolest ticker, and it's also the best E&P, operator in the country. This is at 186 here. And, this could be at 200 in a heartbeat. That's a 10% move. But look at Oil U, which admittedly is a 3 times leveraged ETN. I just told you about 10% in FANG. Well, pretty much the 3 times. This thing could be back at 42 in a nanosecond, and we're talking about a 25% return. So, and it depends. Oil U is definitely a more volatile stock than PDD, but I think you can kind of seed your portfolio with these high beta names that are also incredibly uncorrelated, because what's going to happen to PDD has nothing to do with what's going to happen to Oil U. But this is different than what we were dealing with in the start of the year. In the start of the year, it needed to involve AI and the Mag 7, but they're all kind of the same stock. Now we get the opportunity to go in and find idiosyncratic opportunities that are not related to each other, that can build a really nice portfolio with, 20-30% upside into the next, 6 to 12 weeks.
I love it. So how do you feel about, are there any lithium plays you really like? We were talking about lithium in a meeting earlier. What is the big, I'm looking through all my tickers here.
Yeah, I mean, if you look at, you've got LIT, which is the ETF, which a big chunk of that is Tesla, and then actually as operators, the biggest liquid U.S. traded one is Albemarle, which is ALB. They're basically the same chart. This one, I'm going to make a funny analogy, but I think it's kind of the same. These are sort of a version of what we were talking about last week with some of the circa 2022 metaverse bull names, meaning like Roblox we were talking about. This chart here, when I look at Albemarle, take this chart out a little bit more, actually. Take it out to a 5 year. And, wow, this thing had been in late 2022 was $330, and now it's 92 today. They're very interesting. They're very interesting from a technical perspective. I'm a little bit more cautious than maybe I am with oil, because the reality is the lithium situation is just a lot more oversupplied than the oil situation. So, I think the backdrop's not as attractive. But, look, we may be, and I suspect we are, going into a period where the laggards lead. And if that's the case, I mean, we talk about this, the same chart. Albemarle could be at 120 and you'd just be like, oh, we're back
Yeah.
at the base where it's been trading for the last, for the last year. So
Yeah, and with lithium, and this is some squishy fundamentals for you, and it's not something I follow that closely, but weren't we in a situation where the whole story about lithium was ultra scarce? The only places you could get it were hostile nations and stuff like that. And then wasn't there some huge lithium discovery in some place like Pennsylvania recently that sort of like everybody said, "Oh, this is the biggest lithium cache in the universe," and we didn't
well,
even put it there. That it always
it
seems to end up that way.
yeah, you got most of that right. Just the country's wrong. It's Chile, which is the
Okay.
largest lithium producer, and I think the big lithium finds have been in Nevada. But yeah, high prices solve high prices in commodities. I mean, I think that's I in theory we're supposed to run out of oil next year 35 years ago.
Yep.
And last I checked, we're pumping more oil than we've ever pumped in human history.
Yeah.
So, but that doesn't mean you don't get into cycles. And I think, but just looking at this, and again, I'm not as fresh on we rode these stocks up, my partner Whitney and I, back in 2019 through like 2022. So I'm
Mm-hmm.
not as fresh in the fundamentals. I like it as a counter trend trade, as like kind of a snapback. But it's a little bit harder for me to get behind in terms of in terms of the fundamentals. But let's go through some of like I'm going to come back at you here. I think there's some setups that are very similar to what you're looking at.
Yep.
Your style. Take a look at Uber. Is
Yes.
something there that's knocking on the door, in my opinion.
Yeah, I mentioned that in chat today. They seem to be doing everything right, and I mean, they had a massive rally last year's melt up, and then they flamed out earlier this year, and they've building back ever since. And looks like they reported bang up earnings, or at least everybody liked them. Uh, and we got that huge positive earnings reaction, and now we're back here. It looks like they've completed whatever this consolidation base was, this fake out lower, and this looks like a pretty decent breakout to me from here. I saw it moving earlier today. It was one of the brightest green boxes on my screen.
Yep.
But yeah, I mean, I think they're doing everything right. And I mean, I don't know if this is going to be a winner take all market, but it looks like it's going to be Uber Waymo versus Tesla as far as the self-driving software wars are concerned. And so that might only help in the short term here. We have Tesla kind of melting up higher again, heading into October, which is, I think we're supposed to get next month the big robo-taxi event from them. And so we'll see how that competition goes. But both Uber and Tesla look very interesting to me
Yeah.
here.
It's the robotaxi date. I want to get this because we keep on October 10th is the big robotaxi date.
That's coming up really
Um,
soon.
yeah, yeah, that's just in a couple of weeks. No, I think it's there's some really great setups. One other one that's a little off the run, meaning that like people may not have know the company, is I would look also at Rollins Inc. That's a perfect. I feel like that's the perfect setup for also what you do. I mean,
What ticker?
they ROL. They actually run. It's the largest pest control company in the country. They run. I forget which ones they run, but just look at that chart. I actually found it because of the chart, not because I have
Yeah,
any
no,
views on pest control.
no,
But
it's a
like,
beautiful chart. Yeah.
that's the kind of thing. So look, I think you got these great setups. I think this is a time when portfolio construction actually is probably more important than it is. I don't know. It's as important, more important than it is in kind of a just any old market. Because you need to be relentless about like prioritizing. And if you've got something that's good in there, good is the enemy of the great. And try to figure out where you can find find the best setups with the most upside, while at the same time still being diversified and making sure that you're watching, that you're not going to get hauled out. So
Yeah, these past couple weeks, and I've been making notes to myself, this is the time where you really put in the work. And like I've been going through like my longer term holdings too and saying, okay, like, what do I need to free up cash to do, if and when this market starts moving here? Because the last thing I want is to be stuck in an underperformer that's dragging me down while we're ripping higher. So I want to make sure that I'm in the best names. We're coming out of the summer. We have these last few weeks to really like dig in and try to find out who those next leaders are going to be, because like you mentioned last week, you were saying that, and I'm not trying to put words in your mouth, and if you disagree, please tell me, but you were saying that you don't think it's going to be the semiconductors, Mag 7s that are going to be the Q4 leaders probably heading into the new year.
Yeah, I think that's true. I mean, look, there's plenty for them to do. Like I think there's a big catch up that can happen with those. They've pulled back. I mean, I'm just looking at this chart of Google, and I mean, Google, like I listened to that call, and all Google said is we're investing a lot. So they basically blew away every number and then just said we're investing a lot. And the stock is pulled back. It's still down some 20%.
Yeah.
But that's actually probably the most bullish thing we can say is when you have every index hitting new highs. Yesterday I was talking about the advanced decline lines. You've got this breadth, and then Google, and I bet you if I pull it up, Microsoft are both 10 to 20% off their highs. That's a strong market. Okay. Is when you have that. So, I wonder though, and I honestly, I don't have any names here to point to, but I also wonder, do we begin to see some better setups in some of the smaller cap, like I don't want to say quite micro cap, but some of that more speculative stuff. Like I love PDD, I love OilU. Those are big, they're liquid, they got 30% upside. But I know in the past you've gone through a bunch of the smaller names. Okay, here we go. Yeah, that's a place to go.
I mean, this is hitting all the topics from today. We have China, we have EVs, and we have a very small stock. I don't know what's the market. Well, it's not super small. It's almost $10 billion company, but small share price.
It's almost 12 billion actually. So,
but I mean, yeah, you have this big kind of double bottom base here it's breaking out of this flag today. It's not really extending much. It's only up 6.5%. But this is the type of name that can really fly. Again, I mean, I wouldn't bet the farm on something like this, and I wouldn't be looking to put it in a longer term portfolio by any stretch of the imagination. But this is a good trading stock when the conditions are right. And if we are in a situation where it's all about reflation, China, small caps, garbage runners, I mean, stuff like this is what can really move.
And this pattern, by the way, especially if you break out a little bit from here, you're really looking at sort of this like breakout from a downtrend kind of, where as you just put the line right there, the next stop is 850.
Yeah.
Is kind of be the natural spot for something like this.
Yeah, and it can move fast, and it's just when you get people at the right time, when everybody's bearish, and you change opinions very quickly, then price can move very quickly as well. And this just feels like it could be one of those names. Speaking of things that move quickly, as I attempt to slyly change topics here, what about Bitcoin here? Because Bitcoin has come back to life a little bit, and it's kind of back in this area where it's creeping back onto those August highs right there, or those late August highs. I mean, does this have a shot at being a big time performer in Q4, or are we just going to be stuck in this massive grind that it's been in since the spring?
I'm a huge fan. We talked about it last week. I posted something, I think, on Twitter. I did a retweet today that did you realize that Bitcoin is still up more than both gold and silver year to date? It actually goes Bitcoin, silver, gold, believe it or not, when you look at the year-to-date performance. Now, as someone else pointed out to me, they say, well, yeah, but Bitcoin's still down 10% since March. So if you had money in it, it hasn't done anything for 6 months. I also read, and again, I don't put that much into this, but I think Kamala came out and said that she's going to be very supportive of digital currency also. Yeah, I saw one of those headlines.
I think it was a very broad statement, just trying to alleviate fears that we're not going to be a vehemently anti-crypto administration. I think that's what I kind of gathered, because I did see something related to that. And I think that does probably help to some extent. Yeah, I mean, I'm kind of looking at this and saying, okay, we front loaded all these gains from this massive rally right here. And you go back and you look at how Bitcoin has behaved in the past, and these drawdowns that lead to these big rippers. And it makes me wonder, like, do we need to see another fake low, or another move, like maybe below 50K, before it really gets going again, just to flush the last bull out before this thing really starts running? Because, I mean, there's no earnings, there's no, there's nothing really that can interrupt aside from these random, news bits that come across the wire here. It feels like Bitcoin loves to tease technicians and loves to tease people that look at these levels and these prices. So I try my best to think kind of contrarian about it and say like, okay, we're up at a big level here. How's it gonna fool me right here before it
It's
decides to go?
definitely a money flow asset, to what you're saying. Like it's really hard. But I actually think Bitcoin has a very clear pattern right now, violently range bound.
Yeah,
Okay,
absolutely.
and I mean that. I mean the violence there. Like it's very, very important. So to me, when I look at this chart, I basically say, okay, what I should do here is like basically buy it when everyone's like freaked out because it trades down 15% a day, in a day, and then sell it the day that it goes up 12. I'd actually be curious, and maybe I'll run the numbers to go back and look at this 6 month range. And if you were to take every day of trading, the move in the stock, what would have happened if you take all the moves greater than 3, 4, 5%, and if you bought it that at the close that day? I mean, it's
Yeah.
hard because it doesn't stop trading. And what would have happened if you sold it? Yeah, look, I'm very bullish, long term, but until it proves itself otherwise, you're violently range trading and you're in the middle of the range. So to me, I don't think there's a whole bunch to do, at this point. So
Yeah, it's tough to do, but that idea of just being a very opportunistic mean reversion player in the Bitcoin space. I mean, trying to catch these tails when everybody's panicking on these big volume moves when it's down, and then just riding them back up a little bit for a couple days. In theory, it sounds great. I think it'd be tough in practice, but I do like it.
well, can I tell you one thing though?
Yeah,
Bitcoin ain't going bankrupt anytime soon.
that's true. Yeah.
Like that's the thing about macro trading. I was actually just writing a note about this. Is that like one of the things I like about trading the macro side, and I'm more of a stocks guy. That's where my heart is. I spend 90% of my time. But
Sure.
copper ain't going bankrupt. Bitcoin ain't going bankrupt. Gold's not going to have a bad earnings report or something like that. So I think that when you can find the moments of panic, they're fewer and far between, to be honest, but except in Bitcoin, I feel, if you can find the moments of panic, you can probably have a little bit more confidence, because it's not like you're going to have an accounting scandal tomorrow,
Yeah.
in one of these. Now, Bitcoin, I know there's the whole story. It could eventually get hacked or whatever, but again, we're talking there about a 1987 to 29 type event. And if I manage my trading portfolios and investing portfolios waiting for one of those, I never would have made a dime, in the last 30 years.
Yeah, and again, I'm in the same boat as you, more of a stock guy than a crypto guy, obviously. But I do like to trade the stuff that moves, and Bitcoin's definitely a mover. I saw Ethereum was outperforming yesterday for a bit. It did kind of pull itself back into earth right now. It feels like this was kind of a failure to me. I know I have some old lines on this chart here that I'd kind of leave up just to see where my thinking was at the time. Um, do we think that Ethereum has a chance to get legs and to potentially outperform Bitcoin? It's Bitcoin and Ethereum are really the only ones that I look at. I really don't look at a lot of the other coins right here, but it seems like Ethereum's just been beaten into the ground over the past several years. It tried to catch up. It was actually outperforming Bitcoin, I think, during Q4, during the melt up of last year, but it really hasn't done much since it peaked in March, just like Bitcoin, and it's broken down a lot more. I mean, does this thing have a shot to retest 5K anytime soon, or is this just in no man's land too?
Well, I'll take 2 points of view on it. Number one, just purely from a technical perspective, I mean, I guess you're also in a violent range, even more violent range, if you're at the lower end of the spectrum. And that makes it a little bit interesting, again, because Ethereum ain't going bankrupt either. From a longer term perspective, one thing I do feel about both of these is that I feel like they trade in a stair step function, which is, you kind of churn, you're doing this, and then boom, you just create a new level. And I think that's
Yeah.
what's going to happen with both these. I think we're going to wake up and there's going to be a 6 week move where Bitcoin's over 100,000. you
Yeah.
know,
Where
and
you can't buy enough. You can't catch it. It just goes, goes, goes.
yeah, you may try to get in on it, but like
Yeah.
it's gonna be brrr,
Yep.
and there's not necessarily going to be any catalyst. I think it's just because with Bitcoin, I'm sorry to go back to Bitcoin here. I also think what you're seeing with Bitcoin is you're seeing a lot of storage. You're seeing a lot of people just buying it and holding it and not doing anything with it. And you've got a billion people that I think can still do that in front of you. Ethereum is actually quite interesting. I haven't. I want to do some thinking about this one because I still think Ethereum does have more utility. It has more uses. Now some of that's been taken away with what's happened with Solana and some of the stuff with Bitcoin itself. But this one is down at the bottom of the range. And man, you could have this at 3,500 and you didn't miss a darn thing.
Yeah.
Meaning like the chart you wouldn't say was broken out or anything. It's a really interesting market, right? Is we've got with these things that just have these beautiful charts that look like they're ready to break out. You've got these absolute leaders, Google and Microsoft, that are kind of treading water or look like they can bounce back. You then have like a bunch of things that have been knocked on their asses, for
We can say that.
for a long. Okay, I don't know. I just want to be careful, for a long period of time, and it's really interesting. So, like I said, I think this is a period that you really want to optimize your exposure. You really want to be thoughtful. But there's it's a target rich environment. Now, now I'm going to give one caution here. Okay. We're not alone right now in saying this. And this kind of gets back to what I was saying about Talon and Constellation. Like I love Talon. I think Talon, I put a note out there saying that I think this could go to, or will go to 250. I don't buy stocks that have an RSI of infinite. The RSI in Talon is 76 right now. Just be patient. Wait for your pitch. That gets all back to portfolio optimization right now. The most important part of buy low, sell high is actually the sell high. Okay. The emotion behind greed and fear is much more powerful. So to be able to buy low, you need to sell high. So that's the other thing I would do here is I would be I don't want to say aggressive, but I would be smartly tactical about taking your profits and redeploying them into things with more upside in this environment. I think that's definitely what one should be thinking about.
Yeah, very tactical. And like you said, I mean, anybody can buy a stock. It's super easy. But selling is tough. Selling ain't easy. You got to really figure that part out.
Well, and I also think selling when you've just made a lot of money, believe it or not. Okay, I'm going to leave aside the concept of taxes. We can talk about. I could dive into all that here. We're not giving personal financial advice. Your tax situation's your own and all that. But what I was going to say, it's really hard when you sell something up 30% because you're like, oh, it could go up 60. And I'm going to say this because I've seen a lot of people do this recently in these stocks, is you sell them and then they go up more. And all you can talk about for the next 3 days is how much more money you could have made. Don't do that.
It's psychological damage.
That is the most insidious, damaging thing that you can do for your psychological mindset on trading. When if you have a process, plan the trade the plan. You have a process. You said, I was going to sell it here. It's got an RSI of 76. I'm out. I'll get back in when the RSI is back down, the MACD's back down, the stocks, treaded water for a period of time. Stick to your process. Don't doubt it. Move on and go take that money and go buy PDD or something like that. So, because I think it's very, your psychology to get you to make good trades is so important, because if you're not in the psychological right place, you're gonna mess it up.
Absolutely. Yeah. And then you start spinning your wheels and second guessing yourself, and it all goes downhill from there.
It's Jacob's ladder,
For sure. Just going back to something we were talking about before and some crazy charts. Copper is absolutely blasting higher today, up 3%. We had this huge boom bust earlier this year with the move up above $5, and it looked like copper was finally getting some legs. And then I guess, I mean, we can blame this on a bunch of different things here, but do you think that this is all China right here, this candle? And do you think this has legs? Do you think we're going back to 5, or do you think this is just going to be a big old mess?
I go back to like violently range trading. The challenge with copper back in earlier this year, and I thought it had a chance to break out just like you.
Yeah.
But when you take these commodities and they go parabolic, 380 to 500, I don't. It's hard to get real follow through on parabolic charts and commodities, and so I think that we're kind of have been digesting that. But look how far this was from the 50-day moving average on May 21st. Let's go actually, yeah, on that day, it closes at 503. The moving average was 448. That's a lot for copper to be that
Yeah.
to be that exposed. And I feel like we've been treading that water. So now what happens? Okay, are we going? Ask yourself. We've been in a regime of economic slowing economic growth. Okay, that's what you can see it in the jobs report. You can see it in the ISM. You can see it in the PMIs. But now we're in a regime where maybe the next move is like acceleration. Now that might be 6 months from now, that might be 12 months from now, but I think that the stock is beginning to predict that, perhaps. But would I go out and buy copper here up, 3-4% on China Day? No, I wouldn't. I'd wait for a consolidation. But I'm going to get back to one thing, and I'm sorry to pound this home. We don't have to buy anything. We certainly don't have to buy everything. We can pick our spots, so find 2, 3, 4, 5 things that you love and stick with it. And I'm going to go and pound one here. That you've been talking about is natural gas. I love this trade. Because guess what? It gets cold and we burn more gas, and often it trades up. Like, keep it simple, stupid. Is the KISS is the saying.
And then we have, UNG. I mean, just starting. I'm hoping we're just starting here, and we get a really nice move. Nice inside day so far on UNG. Couldn't ask for more for how this trade has started up. And like I said from the very beginning with this one, this isn't the one you want to chase. We wanted to get in on this early as it really was starting to move toward that breakout zone, because when it goes, it can really go. And I'm glad we were able to do that.
Well, and this is another one I use that, very like probably overly wonky term, asymptotic. When gas trades, I mean, you said it just right. Look what happened here back on December 12th, okay, of last year. Gas was at, and I'm using a different price deck than
Sure.
I'm using the same price deck, 18. And on January 9th, it was 26, 30% move in 20 trading days. Look what happens on May 1st. And gas is at 14, and gas is then at 20 on May 22nd. When this move happens, it's going to be 2 weeks. It's going to be 2 weeks, and you're going to make 25% and get out. And I think it's that kind of that these are, they're very nice traders if you buy them down and you got nice seasonality behind you. And I think we've got a more constructive backdrop behind us.
Yeah, it just felt like everything was setting up for it to go, and that's exactly what's starting to happen right now. And speaking of, just looking all across the commodity space, it feels like we're just spoiled for great charts right now. We have silver bouncing again today. Gold just is never going to go down again. I say that and watch, it's gonna have to go down soon. But like this is getting outrageous. It just won't stop. I mean, it blasted through 2,600, and it's powering higher to new highs today.
Wow.
And I know I've said this before, and I'll say it again. Where is the chatter about this? It feels like everybody's relatively quiet about what's happening with precious metals right now.
I agree. I mean, my style. I'm not someone to go all in on something that looks like this at this level.
Right.
But I will say this: what I do think is powerful here is that when you get these overbought signals, while they have a high likelihood of indicating consolidation in the near term, meaning that the probabilities move towards the thing kind of going sideways for a little bit, they are extremely bullish with a 6-12 month view. And, it feels to me, I will tell you what I do feel though, Greg. I feel the $1 trillion every 6 weeks or whatever we have as the deficit is more strongly moving into the collective psyche. You talked about power prices and the power crisis, which I've been banging the drum for the last 6-12 months, moving into the collective psyche. I feel like that the $1 trillion of, and someone will correct me on how much the deficit's growing every whatever it is. I just know there's $1 trillion and it's coming up a lot. I feel like that's moving into people's collective psyche, and it's very, very bullish that you're going to begin to get people that traditionally hadn't bought gold. And it's funny is when inflation was high, they weren't interested, but now inflation's low, but they say, oh, we're deflating the dollar. I'm concerned about the budget deficits. And if anything, I think maybe it's because the political environment that we have the election, that people are a little bit more focused than they would be, which I don't know, maybe gives me some caution into next year with gold, is that once we get off politics, is gold going to be as popular a name? I don't know. I'm just sort of
I think that's all fair to think about. And maybe it's also a symptom of the fact that, like, I think that even though inflation has abated, I don't think that it has left the public consciousness, because I don't think anybody from my generation has ever talked about inflation before. And then all of a sudden it's a thing. It hasn't been a thing since, late 70s, early 80s. It hasn't been like a front page talking point, really. Maybe in the 90s a little bit, but not really. But this is the first time I've ever experienced, like real inflation and discussing it. People chirped about it after the financial crisis and nothing ever came of it. And now we're actually seeing it. And I think it's tough to turn that off when you think about, like, oh man, prices only go up, and then that's been hammered into your head for 2 years. Even when prices go down, like the politicians still talk about it and say, look, prices are going up, and it really resonates with people. So I don't think that's going anywhere.
Yeah, I don't think inflation's going anywhere. But I guess the point I was making is when inflation was ripping, no one, even though they should have been buying gold, no one was buying gold.
Right.
But now, I pulled up the numbers, by the way. So you all know when I'm looking away, I'm looking at my screen. So it's like, I'm not checking ESPN or anything. We're at 1.9 trillion at the end of September 2024. So basically, we're burning a $1 trillion deficit every 4 months, of 2024. And I think that having both Kamala and Trump out there, and all I've heard them say is they're going to spend more. It's just like it's like I said, it's like a party. They're like, oh, you want cake, you want donuts, you want croissant, whatever. You have it here. Vote for me. Yep. And I think that's really what's driving gold. And that's maybe also a little bit of a different dynamic than Bitcoin. Because I do think the two are related. But Bitcoin is not quite yet at that store of value. I think it will be, honestly. But yeah. But this gold chart, that I pulled up a chart here. I pulled up I'm going to go max on Bloomberg. Go pull up the gold chart and pull up the max that you can pull up.
Sure. I'll go like yearly candles. It takes me back to the 60s, 70s. There we go.
It's hard. It's hard because of the what happened in the 70s when we went off the gold standard. So you got to but wow, that chart's that's incredible. So, look, I guess what you would say is buy on a pullback.
Yeah, absolutely. And it feels like we're, and the way I'm gauging things, and like you were saying earlier about picking the best spots to be in this type of market right here, it feels like we're getting to the point where, we could see some silver outperformance, and that usually means that, the speculators are back and they're ready to roll. It's been kind of a rough summer for some of the miners, but silver has woken up in a very big way over the past couple of weeks, and it looks like it wants higher here, breaking above 31. It feels like we might get a little consolidation here at those highs near 32, and then it's time to rip. We'll have to see how it goes, but silver miners, we're in a silver miner trade over at the trading desk. This is something that I like moving forward here, and I don't think it's too late to hop into this one just yet either.
Yeah, no, look, it's silver. Silver looks so. By the way, year to date, silver's actually outperformed gold per my post this morning. Look, silver looks like, honestly, silver looks like it'll be the next gold, which is why I love your trade. You take those two charts, and this just looks like gold where this was. I don't know, 3 to 6 weeks ago or something like that.
Yeah. It's funny how the leadership is still kind of waffling back and forth. We were waiting last December for some indication that gold 2000 monthly breakout was going to stick and then consolidate and move higher, but you had this situation where the gold miners were just looked terrible and just
Yeah.
weren't playing along, especially the bigger ones. It was like Newmont just kept on going down and they couldn't get any traction. And now it feels like we're getting to that point in the cycle where, okay, people are going to be wanting to speculate on these stocks again. And it's been stop and start, but I'm looking forward to when we really start hitting the gas and those start just producing crazy returns. When the junkier the better on those miners too. They can really get.
Well, yeah, and I mean, there's such a selection to choose from, in the sub-billion-dollar, but those are just options in my opinion,
Yes,
right?
absolutely.
And so to me, buying one of those is like the gold equivalent of buying GameStop or a meme stock. It's like when meme stocks are hot, choose your your poison. When gold stocks are hot, choose your poison. But it can be very powerful. I'm a huge fan when it's done in the right position size. So,
Let's see. We have some. I think we have some tickers in the chat. Somebody was asking about Lilly.
yeah, Lily's interesting. Technically, this is just a gorgeous chart. This is just a beautiful, beautiful chart.
Yep.
That pullback on Lilly was an absolute gift. This is an incredibly stable company. They've got an incredibly, a great product. I got to tell you, I'm a little concerned about Lilly from the fact that I just feel like the Mag 7 that, it's just, there's just more and more talk about, competitors. And like, I feel like sentiment has turned a bit. So like, look, I think if you own Lilly for a longer term, time frame, I think it's going to be great. I think Lilly's got a very good chance to be the next $1 trillion stock. It's at 870 billion right now. But if you're looking for the next 3 months, and especially trading portfolios, Lilly would be far down my list. I just hear too much, we've actually, I think maybe someone's asking because we got Bernie Sanders coming in and ripping on the companies and, all this other stuff. So, I love the company, but I'm not sure that I love the stock here, especially as a trade.
Yeah, no, I hear you, and it definitely could be in one of those underperforming boxes as we move forward. Not only healthcare, but those gains are so front loaded in this year. Maybe it just needs more digestion up here.
Yeah.
Like you said, that huge pullback right there. I mean, what a nice rally off of those earnings. And when it got down there where that shelf of congestion is between like, what is it, 740, 780? I mean, yeah, that looks beautiful. And then it's hanging out here in the 900s. I don't hate it, but yeah, I think there's better traders. There's going to be better traders out there over the next several months.
Yeah.
Let's see.
Someone was also asking about Southwestern Energy.
SWN.
Yeah, this is actually a name that I've traded for, I mean, I don't 20 some years. It's actually kind of a little bit of a sad story because they were crushing it, and then really, stumbled. I don't know. I would kind of put this in the like, don't love also. Like, I think it plays into a lot of the things we're saying about energy, natural gas, all of that. But you just went up 12% in 2 weeks. I've not looked at the news to see if there was any like significant news behind it. I'm looking right now. It doesn't look like there was. So I think it probably works because the rest of energy works. Is it the best trade? I'm looking at the short interest. There's no short interest. Yeah, it works. Could you find better? Maybe. I kind of feel bad, especially after the move that it's had here recently.
Yeah, speaking of finding better, I'm still stalking my Roblox.
I was going to ask. I wanted to see what's doing.
Yeah, so I mean, it's doing exactly, and this doesn't always happen, obviously, but it's doing exactly what I kind of thought it would be doing. Where, we got people build up here as it approached 45, and then it's running into sellers at this 47 level right here. It can't quite get over the hump. It was down quite a bit. Well, not quite a bit. It was down like 1% yesterday, and now it's up almost 2 in the mid 46s. It feels like let it churn a little bit around this area right here. I know this line isn't in the best spot. I can probably just bump that up a little bit, but
yeah,
this is the spot right here where it's just churn, and then maybe we get a nice hook higher. I think if it breaks 47 and then it does it convincingly, and we get a close above that level, then it can start running. Because even if like even if it only gets to 54, I mean, to start off with before it needs to like rest a little bit, that's still a heck of a move for this stock that's been absolutely decimated. And we're in a spot now where, hey, we're in a rate cut cycle now. This is obviously a more rate sensitive name. It was absolutely destroyed in 2022. It was in the tech growth basket that just got slammed. Beautiful base,
Well,
huge big base here.
And let me make a point. This is going to sound strange because I don't know that people but this is what we would do at my fund or on the trading desk. I think right now is the time to be more aggressive, not less. And I know, I guess, newsletter writers and managers and advisors are never supposed to say that, but that's wrong. Because I'll tell you who does say that. People who run billion-dollar funds like I did is you got to know when is the time to be aggressive and when is the time to be conservative. And it's almost like the sell high part of it. Like it always sounds good to say, oh, you got to be more conservative. You got to be more conservative, but it's wrong because you do get these moments in time where you can be aggressive. And right now, going into year end, again, I get back to the election. I just don't think unless something dramatic, and there's been 2 assassination attempts, happens.
Yeah.
I don't think we're going to know anything on the election until maybe 2 weeks after the election. It's going to be the reality.
Absolutely.
So I think that if you're ever going to lean in, probably a lot of you have hopefully had some good years this year. You've got some nice profits underneath you. Be aggressive. And this is again one of the hardest things I had with young portfolio managers in my firms was to get to them and say, look, you seem to understand very well when it's time to back off because you're probably getting your ass kicked because of the market.
Yeah.
But there's a time when you lean in when you're at the blackjack table and you got the 2 8s against the dealer 4, split them, double down. Like this is what you need to do because that aggressiveness is actually the key. You make enough money in the bull market and you control your losses in the bear market, you're going to make an absolute killing across 2, 5, 10, 20 years.
Yeah, absolutely. Knowing when to turn it on and off. That's a tough thing to do because like you said, like it seems like everybody wants action. People want to trade steadily. And then that's something that tripped me up when I was younger too. I was always like thinking about like, okay, what do I need to do this month to hit like a monthly goal? And instead of letting the market dictate, like
conservative always sounds smarter. Okay.
Sure.
Critics always sound smarter. Critics can be right. Optimists make money.
Yep. Beautifully said. All right. Well, I think that brings us to about the end here. Do you have any last thoughts for us as we go into October here, as we go into Q4? What should we be watching? What should we be thinking about? What's the last word today?
Yeah, look, be aggressive, but have an action for bias. It kind of gets back to what we were talking about SWN, what we're talking about Talon. Take your profits. Because taking your profits on overbought stocks is what's going to allow you to buy these pullbacks. Because I will tell you, the biggest concern I have is we agree, right? And we're smart guys, so I think we often will agree and things like that. But I get a lot of agreement here too, and so we're going to have these trip ups. There's going to be hiccups, and remember what happened on August 5th. There might be 1 or 2 hiccups that are just friggin' crazy. Like we'll just be like, what the hell happened? But if you've taken profits, you've got a nice tactical portfolio, you're watching your position sizing, you can do what we did and go in and just buy the living bejesus out of August 5th. That kind of sell off. Yeah. So, that's how I would be focused on these next couple months.
Awesome. Well, as always, great hearing from you. We love that you're in chat, sharing all your thoughts right now. I'm gonna post some notes from you that you gave me earlier. Once I log off here and get those final thoughts in. These 10 a.m. calls, I mean, they're a ton of fun. I look forward to doing one with you again real soon. And, again, thanks for being here.
Well, who knows? Maybe we'll be in the same room soon.
Ooh, exciting. All right, take care, everybody.
Cool. Thanks, everyone.